How I made 373% in one day using butterfly option. This is a real-time trade recap. Follow Frank Trades on X for live trading. 0 DTE or 0 days to expiration XSP options strategy explained. In today's video, I walk through a real trade I executed on December 2nd, 2025 at 6:48 a.m. Pacific time, using 0 DTE XSP options, the 1/10th version of SPX, to capture a fast intraday move. You'll see why I chose the butterfly structure, the exact levels I used, how the profit developed in real time. This isn't hindsight or theory. Every trade is posted live on X. Follow Frank Trades on X, real-time trades. 0 guesswork, 0 drama, every move explained. As you can see, XSP is 1/10 the size of the SPX, and therefore the options cost dramatically less, allowing traders to scale in and out of positions without the high capital requirement of SPX options. This was our exact put butterfly on December 2nd at 6:48 a.m. It paid max payoff when XSP closed at 683. You can see that we purchased one XSP 681 put, sold two XSP 683 puts, and purchased one XSP 685 put. And you can see here that I posted the trade and said, bought 40 DTE butterflies on the XSP. This will pay off if SPX remains within range. Let's see. We bought 4 contracts and paid 0.41 cents, or $41 per contract. The butterfly at expiration is valued depending on where the XSP price closes on the day. If it closes between 681 and 683, the value is the XSP closing price minus 681. If XSP closes between 685 and 683, the value is 685 minus the closing price. The max this butterfly can pay is the difference between either wing and the body, and it is in this case 2 points, or $200 per contract. The reason I chose this spread on that particular day was based on my expectation of a low daily trading range, supported by Edgeful's data-driven market analytics. The report I relied on was the Average Daily Range, ADR, study for the SPY, which is a reliable proxy for XSP movement. The 5-day ADR had dropped sharply from 13.35 points on November 24th to 8.52 points on December 1st, indicating that volatility had been compressing for several sessions. Based on that trend, I expected another contained trading day on December 2nd, making a defined risk, range-based structure like the butterfly a logical choice. On the chart, you can see the New York session on the XSP via Edgeful TradingView indicators. They have 30+ custom indicators available to subscribers, and here I am using their market sessions custom indicator. My expectation going into the morning of December 2nd was that price action would remain contained, similar to the prior day, and finish within roughly a 5-point range. This chart shows the real-time price action from the 6:30 a.m. Pacific Open through the 1 p.m. close on December 2nd. At 6:48 a.m. Pacific time, I entered a 4-point wide XSP call butterfly and held the position until the close. XSP finished at 682.94, which is very close to the middle body at 683, placing the trade near maximum value. XSP opened at 683.10. The range of the day indeed was 4.49 points, and XSP closed at 682.94, finishing down on that day by 0.16 points. Here's the math. Expiration value equals 682.94 minus 681.00 equals 1.94 points. Cost of the butterfly equals 0.41 points. Profit equals 1.94 minus 0.41 equals 1.53 points per contract. on 4 contracts that yielded a return of 373% profit in one day. This is the power of a 0 DTE, 0 days to expiration, butterfly, when volatility compresses and price gravitates toward the middle of the structure. Max profit hit on the 0 DTE butterfly today, all posted in real time. Follow Frank Trades on X for live trading. Zero guesswork, zero drama, every move explained.